Hello, everyone. This is Joel Daniels with KSN Property Management coming to you from our spacious and luxurious virtual headquarters. This is one of the videos that we've done for our do-it-yourself landlord series to help all the do-it-yourself landlords out there. In this video, we're going to be talking about the fairly boring and mundane but important subject of insurance. It's very important that you have the right kind of insurance on your rental property. Before I go any further, I do want to make sure you know I am not an insurance broker, so take this information and make sure you discuss it with your insurance agent. We were recently at an educational conference where we were picking up some new skills to help us run our business, and we learned some very interesting things about rental policies. First and foremost, you want to make sure that you do not have just an ordinary homeowner's policy on your rental, because if that's the policy that you have on it, if the insurance company discovers that you've been renting it, then that means they'll be able to deny all coverage for any claims that you make. This is particularly applicable if you've been living in the house and instead of selling it when you move out, you decide to start renting it. You don't want to just continue using the same homeowner's policy that you had before. You want to make sure that you switch to a landlord policy. And what we learned is, generally speaking, there are three types of landlord policies that are out there, and they're known by their abbreviations, I guess. DP1, DP2, and DP3. We strongly recommend that you obtain what's called a DP3 policy for your rental property. And that's because the DP1 policy and the DP2 policy are what are referred to as named peril policies. What that basically means is on a DP1 or DP2, they're basically just going to have a list of things that they cover. The DP3 policy, on the other hand, is sometimes known more as an open peril or an all risks policy. And it takes the opposite approach. If you have a DP3 policy, there is a small list of things that they do not cover, and everything else is covered. So bottom line is DP3 policy is going to cover more things. Another important difference is that the DP1 and DP2 policies are only going to cover the actual cash value, or sometimes known as the depreciated value of your property, whereas a DP3 policy will pay the replacement cost value. And that's important because we're recording this video in 2026. We've been dealing with a lot of inflation lately, and inflation affects the cost of handyman work and construction work just as well as everything else. So with a DP3 policy, which provides replacement cost value, that means the insurance company is going to have to pay whatever it takes at current market prices to get your property rebuilt to the condition that it was before the event occurred. So, if there's any increases in cost for labor, materials, whatever, a DP3 policy will cover that. DP1 and DP2 policy might not. So that's really all there is to it. Just in conclusion, when you're renting your property out, make sure you talk to your insurance agent and make sure they know you're renting your property out. So you want to make sure you have a landlord policy, not a homeowner's policy. And for your landlord policy, strongly recommend that you take a look at getting a DP3 policy, which will cover more and which will provide replacement cost value. So again, I am Joel Daniels here at KSN Property Management, where we are not monsters. And if you ever have any questions or if there's anything we can help you with, don't hesitate to reach out and let us know. And if you're watching this on our YouTube channel, don't forget to subscribe so you'll get notifications when we post any new videos.